Here out to our guests. Okay, can everyone hear me?
I hear you.
All right, Marty, thanks a lot. And all right, we have Seth here as well. We're streaming live on Facebook, and we just broadcast out to our participants, so they are jumping on, and we'll get everyone jumping on here as we get started. So we have a special guest here today. We're going to mix it up a little bit. Very exciting, very exciting. Martin Chera, glad to have you on here. How we doing?
Great. How you guys doing?
Pretty good, my friend. I'm going to read your bio here so everyone knows who we're dealing with. Mr. Max Chera. So here's Martin's bio. Martin Chera has been an owner of Express Capital Financing for the past 8 years, helping his investors and clients in building their wealth in real estate. Martin has a deep understanding of the inner workings of real estate business operations. He services the needs of investors in real estate, helping them identify, qualify property, and attain their financial goals. Martin's business and life experiences make him uniquely qualified to the service and the needs of investors. Martin officially uses his knowledge and expertise to walk his investors through the stages of selling and buying a property with a market analysis and return on investment and where the market trends are going in today's economy. Martin utilizes the business acumen he acquired over the years to help his investors buy their properties for maximum return when they are ready to exit and acquire additional properties to fuel the growth of their existing company. Martin's personally married to every client, providing the best possible service and handling all their deals in an efficient and effective manner so that they can grow their wealth in real estate. So ladies and gentlemen, Martin Chera, thank you for joining us.
Thank you for having us.
Absolutely. So as our attendees jump on, everybody, this is Aaron Fargnito, your normal host here of People's Capital Group investment webinars. And we have Seth Martinez. Say hi there, Seth.
Hi, everybody.
All right.
Hope everybody's well.
Absolutely. So we want to mix it up a little bit for our attendees today. And we're going to do about a 10-minute discussion here, pretty casual discussion. I'm going to talk to Martin about the current market and what's going on right now. It's predictions also just on the borrowing end of it, because that's a big part of the market, as if banks are lending and able to lend to borrowers and now continue the market to strength going forward. So we're going to have a quick 10-minute discussion here, and it's going to be nice and open and casual. Also, to all our viewers here, if you have questions as we go along, please go ahead and click the Q&A box, and you can type your questions in the Q&A, all right? I'm going to try to spot those as we go along, but feel free to type any questions in the Q&A, which should pop up at the bottom of your screen. If you can't see that, you can click the 3 dots that says more, and you can click chat, and you can type a question in there. So Martin, we just introduced you here. I'm going to ask you a quick question here to get started. So what is your view right now with everything going on? What is your 2020 market outlook?
The outlook, I feel, not just as a lender, but as an investor, that with this uncertainty, there is definitely opportunity. Unfortunately, due to this COVID, there's going to be divorces. There are deaths already, as we know. People looking to downsize, to scale their market influx. And with that said, so there's going to be a lot of opportunity of properties coming on board. It still hasn't taken its effect yet. And I think in about the next 2 or 3 months, we're going to see a surge of property listings up there. So that's my input.
Yeah, I agree. Absolutely. We've seen that actually so far collections are strong and multifamily housing values are strong, but the residential real estate is starting to come out of the woodwork. A lot of motivated sellers, people just trying to move some properties off their books. And we found on our end that some of the houses we were flipping, the buyers that were lined up for them had trouble closing out their loans, which if a buyer cannot close a loan, I can't sell them a house. If I can't sell them a house, that comp's not going to happen, and the property goes back on the market and likely sells for a lower price. So what people don't always understand is that the markets are really propped up by the banks. Are the banks giving out money? Back in 2006 and 2005, the banks gave out money too easily, and we ran into a problem. Then in 2008 and 2012, the banks really didn't give out money easily enough, and arguably it kept the economy very soft. So, then the banks started lending again. But right now, as far as lending goes, are you still lending to borrowers?
Yes. So we only paused for about 2 or 3 weeks when it first started to hit early March. And thank God we, mid-March, we continue. We opened it up. which I'll get into our guidelines in a few minutes, but we're actively lending because we see, like I said, the opportunity there, not just from a lender perspective, but I'm also an investor. So like I said, the funding is there, the capabilities are there, the strengths are there. Prices have gone down, which is even more an opportunistic time for borrowers to do, because your success is always in your buying, never in your selling.
Mhm. Exactly.
You know?
Yeah, absolutely. You know, and the biggest thing is being able to also recognize who's an experienced borrower, right? I'm sure that plays a pretty large role these days. I think in the better times, it's easier for newer investors to get a loan, but now I'm sure you look at the track record a little more.
Yeah, pre-COVID, we were taking anybody as long as they had the, 10, 20% down. Now mid-COVID, we want at least 3 verifiable flips done. However, since we're not institutionalized, we're private, I could take on somebody's experience, somebody's credit, somebody's money. So I could mix any of the 3 motions to get things into play and to get the deals done.
Mm-hmm. Yeah, because at PCG here, we actually have a second part of our business that flips residential properties and wholesales residential properties to investors, active investors that are actively buying real estate. So, because of that, we do find that, that market, that part of our business has really slowed down with it being a challenge for some borrowers to get loans. So maybe we'll have to start putting them your way and see if they can get the loan for these properties, and hopefully we can close some flips and some wholesale deals,
Yep.
Absolutely. Now, so overall then, Seth, do you want to jump in here? It's interesting to get your market outlook as well. You've been investing in real estate for 10 years as an active investor. Also, you've been a little bit of a passive investor, but really mostly active, right? And what's your market outlook for what's going on right now?
Well, thank you. I would say, as Martin said, you make your money when you buy. So if there's a good opportunity, you definitely want to jump on it. And aside from that, I think it's still a wait and see situation. It's very fluid, still a fog of war, and no one really knows. If we look at some of the very sophisticated guys, the very successful guys in the multifamily space, though, a lot of them are just kind of holding in a holding pattern, like Sam Zell, and there's another guy called Colony Capital. They're kind of just waiting and seeing. So I think nobody really knows, though. Mm-hmm.
Mm-hmm. Oh, absolutely. Well, that's why we have a well-rounded business with the flipping of houses that, is good during good times and tough during tough times. But the multifamily housing seems to be continuing to cash flow through these tough times, because we buy affordable, middle of the road apartment buildings in New Jersey. So Marty, what were you about to say there? You had
everybody needs a place to live. So single families, multifamilies, everybody needs a place to live. Back in 2007, 2008, it was a financial crisis due to the over leveraging and just, giving anybody and everybody a loan. But as we all know, this is not a financial crisis right now. Excuse me. This is not it's not a financial crisis that was created. It's more of, unfortunately, a pandemic. So with that said, everybody still needs a place to live. And the markets, whether it's mortgages or hard money, everybody was looking to see if the landlords were getting paid. And I mean, the research that I'm seeing out there is that 60 to 70% of landlords are getting paid within that 10-day, grace period. So that's
Correct.
A good sign. I was doing some research today, and the mortgage industry is starting to open up on the non-bank mortgage lending. So it's opening up, which happened. We just opened it up ourselves again. So that's a good thing also. So when the secondary markets are opening up, that's a very, very good sign.
Oh, that's a huge indication that, there's just the overall comfort of the market, the confidence in the market is coming back, which is almost more important than the fundamentals themselves. What's crazy about the stock market, which I just do not understand, is it's going up while we have 26 million jobless claims, right, and growing. So, which is a scary number, but it's also a blip. It's also a crazy time with this pandemic going on. I mean, everyone's filing for jobless benefits because it's a handout. I went online and typed in my information for 15 minutes. I'm going to get $600 a week. I'm like, who in the right mind wouldn't do that? So,
that's why it's not a real number. So it's a good thing in a way. It's a good thing.
It's incredible. It's free money from our government. I mean, I've been paying them for 20 years and now I'm getting a little something back. I like that. I like that.
Yeah.
Yeah. And if I
By the
could
way,
just add one more thing in, by the way, so talking about how this is not a financial crisis is a really big and important part about the entire thing everything that's going on. And because you said something actually very interesting, the stock market's going back up while everyone is, considered unemployed and there's not enough money, and the stock market relies on people putting their money involved into it for it to go up and showing the people, what's going on there. So we already see that the liquidity is not leaving the market. Sure, that there are people that their assets were devalued because of this, but overall in the long term, the money did not disappear. So what's going to happen is we've never had, in my experience, a time where there was a pandemic, prices went down, but yet people still had liquidity to use. So usually opportunities follow with, hey, 5 or 10 people could actually do something here because they were set up that way, or because, fortunately their business strives during those times. But this is one of the times where you'll actually see that there are people that have the ability to do something and want to take, they want to get involved in something. They want to invest in something. How could I use my money here? And that's going to hopefully cause a lot of transactions, a lot of people that now, they might just be a renter right now. And now they said, hey, if I could get a property for 10% off, am I not going to buy it now? Am I going to wait 5 years for it to go up again before I could start looking? So the entire market shows that there's going to be, more money coming back in, and potentially even stronger. I mean, again, it really all depends. No one knows. It's just all very fluid, like Seth said. But there seems to be a lot of indicators that we're not going to be in as bad of a situation as a lot of people think.
Mm-hmm. Yeah, go ahead, Marty.
It's definitely a buyer's market. It's definitely a buyer market.
Yeah, absolutely. And what I'm seeing now as well is a lot of money come in from out of Wall Street. Investors are just frustrated with the up and the down, Maybe their IRA is sitting there and they don't really know what it's doing. And, it doesn't help them sleep at night. If it's up 30% one year, down 30% the next, that's not what you want your IRA, your retirement fund to be doing. You want a nice, steady, 8, 10%, maybe 12, every year, consistent growth year over year that, one day will amount to a nice lump sum. So yeah, I mean, what we're finding here is that a lot of people are coming in into real estate from Wall Street and trying to move their IRA into apartment buildings or syndications, which is great for operators like us, but also good for the market overall, because that capital is going to help to prop up the sales and the purchases of multifamily housing, apartment buildings. And the more money that's flowing into that market, the more buyers and syndicators will be able to purchase those buildings and move those buildings along. And therefore, the values of the apartment buildings shouldn't get hit that hard. Where I could see residential properties and FHA loans getting hit a little hard and have some challenges there as people are out of work and whatnot. So when you're out of work and you can't get an FHA loan, then you're going to go ahead and rent. Therefore, rents tend to stay strong. But yeah, it's such a good point that it's not a financial crisis. The banks are well funded. The government's well funded. The economy was beautiful 60 days ago. It was the best economy we'd seen in generations. It's just such a shame to take that lovely work of art and throw it down the drain. But, I think we're going to get back there in the next couple of years here. Obviously,
you think that long, a couple of years? I'm thinking by 2020, late 2021. That's what I'm thinking.
Yeah, I think we'll see. I think 2021 is going to be a year of coming back, and then maybe by 2022 will be a big roar. But then again, there could be a lot of pent up demand. There's arguments that people need to spend all that money they're saving and making. And a lot of people are getting a lot of government handouts right now. And the thing about free money is, you let it go a little easier than the money we work our butts off for.
I got you. Just to add also, I'm sure everybody knows this, is that the stock market, you got money in stocks, it could disappear overnight. 1,000%, 2,000%, you could be wiped out in a day. But anytime you invest into real estate, it's going to go down 5, 10, 15, 20%, maybe in a year. But so you have a tangible asset still there. And like Max said, with equity. So it's always there somehow if it happens to come back up. So that tangible asset is a good asset compared to to stocks and bonds.
Thank you. Absolutely, Marty. So Marty, how could people reach you if they are looking for a loan to buy a piece of real estate? How can they reach you?
So the domain name, the company name is expresscapitalfinancing.com. And the main number is 718-285-0806. We'll be glad to listen, understand your deals, your scenarios, kind of provide you with the market trends and analysis, letting everybody know, if the analysis of the better to rent it, keep it, sell it, and also provide them with an ROI and cash on cash returns for them. So we're not here just to lend. We'll let them know if it's a good deal, a bad deal, weak strengths about it as well too.
Okay,
And
great,
we
great.
just quickly, I'm so sorry, we opened up our mortgage platform. So if anybody looking for permanent financing, single family up to 4 units, we just opened it up again, 75% leverage, rate somewhere in that 5-6%, credit scores 680 and above, 680
Great.
and above.
Thank you. Yeah, I wanted to bring Marty on here because you have so much experience investing with real estate, running an active business in the lending industry here. And I'm sorry, we didn't introduce your business partner here.
I know, I thought it.
Go ahead.
Max.
Son Max. Oh, your other son. I know David. And now you have another son. Okay, there we go. There we go. And congratulations. I know David just got married over the summer, right?
Exactly.
Max, are you married yet or you're next?
No, I didn't make that mistake.
Okay, there you go. There you go. Save your dad some money, right? Just give him a little break here. Give him a few years.
Yeah.
All right, good stuff, gentlemen. Thank you so much for coming on. Max, do me a favor. Go hit the 3 buttons that says more and write. There should be a chat, or even actually, I think if you write in the Q&A an open question, you know what you could do if you want to type your address in there for your web address for your company, okay, expresscapital.com, and type that phone number in the Q&A. And then if any of our participants want to connect with you, if they are active investors, now most of our attendees are passive investors, but if you are an active investor, you want to try and get your hands dirty at actively investing and personally guaranteeing a loan, then Marty with Express Capital is a great place to go. On our residential side, when we flip properties, we bring our buyers to Express Capital, Marty's company here, to get that loan so that we can sell them properties, because we know they're a good bank and we know they give out loans very quickly and effectively. So they're great for borrowers of all types. So thanks a lot, Marty, for coming on. Any parting words of wisdom?
Any parts of it? Give us a call. We're here to help you out and guide you. And at the same time, if anybody's looking for any type of property listings, bank-owned properties, we also have that as well too. We have, relationship with auction.com, and just to let you guys know, everybody on there, they have a 50% increase in property leads already in 2 months. So that has to tell you that unfortunately people are hurting, and like I said, there are properties there to be bought. Like Seth said, due diligence is very important, and making sure that everything is profitable. But that's what we're here for as well too. If anybody's looking for any strategic partnerships, joint venture, we're here to do that as well too. In a private way, we could do that as well. We're not just lenders, we're investors, and we'll do joint ventures.
And you lend in what areas? We have one attendee asking, where do you lend? They have flips in.
So we're nationwide, 46 states. So we lend, most of the states, North Dakota, South Dakota, Hawaii, Wyoming, we don't do. So that's that, whether it's, again, long-term financing or the hard money.
Okay, great. Yeah, because Diane had asked which you. Okay, great. So that's great. So Diane, you can contact Express Capital there. Excellent, Marty. Excellent stuff then. And what are your thoughts on People's Capital Group?
So everybody knows Seth for Aaron for many, many years already, and Seth, I oversee you in the courthouses. Great guys, great company. And I must say that, when an investor such as Aaron is honest and transparent is very, very important, because anybody could fudge numbers. Anybody could, not be so transparent and all that. And I will say that every deal that he's presented with me, I looked over my numbers, brought it to my accountants to verify a few things. And I will say that he's got good deals going out there. The returns are decent, and I'm sure they're going to be even greater now, during this downturn of buying better. So Aaron, Seth are, a great team at People's Capital Group. And that's about it. You guys focusing on multifamilies. If you have any more deals, present them to me as well too.
Great, great. Absolutely. Thank you, Marty. Thank you so much.
My pleasure.
All right. You guys have a good time here. Diana has a lot of questions for you. So Diane, what I'm going to do, you should be able to see Marty's information in the chat there. Okay. So you should be able to see that. And if you don't, you could just shoot me an email after this and I'll make sure to connect you with Marty, but it's info@expresscapitalfinancing.com or expresscapitalfinancing.com is the website there. So
I'll just take a minute. I'll just tell everybody just quickly. So right now, mid-COVID, we're at 80% of the purchase, 100% of the reno, 65% of the ARV. Rates today are somewhere between 10 to 12%, so they haven't really gone any higher. Points really just depends on the sponsor. It just depends on the deal size. Realistically, we like to be at 2, but sometimes we could be at 3 or 4. If it's a very small deal. Our minimum financing is 75,000, and mid-COVID scores 650. We didn't have any scores before, but right now we got to be at a 650. And again, if you don't have all the cash, or you don't have the credit, or you don't got the score, let us know. We could partner you up with people who have a better score, or perhaps that experience to make the deal happen. And maybe we'll do it ourselves too if we like it.
Great, great. All right, thanks so much, Marty. Feel free to
Thank
stick
you,
on
thank
here.
you.
I'm gonna share my screen here. I'm gonna jump over to our presentation here for the evening. That's going to talk about how we work with investors to buy real estate here in New Jersey, and the benefits those investors experience by working with People's Capital Group to acquire these properties. So we're your People's Capital Group. Seth Martinez is on the webinar as well. Seth, I'm going to mute you real quick so we don't get too much background there and noise, but I'm going to break into this presentation here. And if anyone has questions, again, feel free to hit the Q&A button or the chat button. I should be able to answer your questions towards the end here as we go along. All right, quick disclaimer, this is not a solicitation for funds, legal advice, or tax advice. All right, so Seth and I have been working in the New Jersey real estate market for 10 years each. Our goal is to transform personal finances and quality of life by creating passive income streams through real estate investments. So we focus on working extremely hard, looking at lots of opportunities to bring our investors perfect investment opportunities here in the real estate market that produce consistent returns month over month and year over year. So I read Robert Kiyosaki, Rich Dad, Poor Dad, to get started in real estate. That sparked my passion for real estate. And I recognized that the tax code is not fair, okay? The tax code treats certain assets favorably, and it treats other forms of income unfavorably. So most of us make our income through W-2s, but W-2 income is the highest taxed form of income. So to beat the tax code, you actually want to be investing in real estate, which has the best tax benefits, which we'll explain tonight. And that's one of the reasons I jumped into real estate back in 2010. So I got my real estate license in 2010, read that book. I read a bunch of other books on real estate investing and jumped in and got my real estate license and made some money flipping houses and selling houses. And eventually I found Seth Martinez, and I recognized that Seth had a lot of the skills and talents that weren't my strong suit necessarily, like management and operations and capital as well. So Seth, you want to tell your story a little bit here about how you got started in real estate?
Sure. Thank you, Aaron. Okay, so I came out of New York City. I had a healthcare business, totally opposite of real estate, and I ran it the totally opposite way that I run my real estate business here with Aaron. I was mostly having my hands in everything. I was not delegating out. I had not read Robert Kiyosaki's book yet, which I recommend everybody read, and basically did everything the wrong way. We were still successful. We still sold the business for over, for seven figures in 2009. I took a year off as a sort of a quasi consultant for the new owner of the business. And during that time, I decided to go into real estate, and I moved to New Jersey from Manhattan. I met Mr. Fargnito here as my realtor. Really the only realtor that would want to work with me, because I did a lot of creative types of deals, made a lot of low offers, and but we realized we worked well together, and we had a lot of success. We've done hundreds of deals together over the past 8 years, tens of millions of dollars worth of transactions, millions of dollars worth of profits, and we've transitioned our business even further now to allow people to partner with us, investors to come in deals with us in the multifamily arena. And we bring our expertise, and we realized that we can become even more successful by helping other people partner with us and take part in that success. And that's one way we can grow our business even further. And that's pretty much where we're at right now.
Absolutely. Thank you, Seth. And together we've bought and sold 250 properties, built a property management company that gives us a competitive edge. But tonight is not about Seth and I and our successes in real estate. Those are fun, and we'll talk a little bit about that. But this tonight we're going to talk about you, the investor, okay, our listener here on the webinar. And again, I'm glad we have so many participants on this webinar. It's a tough time right now, but we see a lot of people are really just trying to diversify out of the stock market and invest into tangible, well-managed real estate in high-demand markets. It's not complicated. It's quite simple. We're going to explain how that's done tonight and the benefits that our investors experience and have been experienced for about 10 years as Seth and I have successfully worked with passive investors here in New Jersey. So number one, why do people invest in apartment buildings in New Jersey? We're going to focus on that tonight. And also another topic tonight we're going to focus on is why do people prefer syndicate investing, which is when you pool together capital from 1 to up to 100 investors sometimes. So we pool together capital so that risk is shared amongst many investors, and that allows the investors to get into a larger building that they would normally never have the opportunity to invest in. And larger investments are better investments. We'll talk about that tonight as well. Number three, why do people value PCG's service? So again, Seth and I have perfected a service here where investors can break into the North Jersey real estate market, which is a very, very in-demand market, but very competitive market too. And it's really hard to find a great opportunity here. And we'll talk about that today, tonight here. So a couple notes on the the COVID market impact. As we discussed here, I'm not going to go into this too much depth because we kind of just discussed it, but basically single family houses are expected to get hit a little hard with mortgages being more difficult to get. Therefore, if you can't buy a home, you're more likely to rent. Therefore, apartment buildings should ideally be a good investment in this tough market right now. Self-storage is also ideally a great place to invest because people are running out of places to put their stuff or downsizing. But you better bet you're going to pay for your rent before you pay for rent for your old dusty couch, okay? So therefore, apartment buildings, I think, are better than self-storage during this time. Office and industrial, really not good. We're all working from home, so I don't think that's a good investment. Retail, honestly, retail's been a bad investment for a number of years, ever since Amazon and online shopping has started taking off. It's not a great investment in my opinion. Hospitality and senior housing is a great investment and continues to be a good investment. However, there is so much attention to this marketplace, hospitality and senior housing, and there's not that much of it, so it tends to be more expensive than apartment buildings and not particularly the right type of return investment that our investors prefer. So a strategic way forward would be how to plan strategically to invest in this pandemic so that you do not make a bad investment, which is our main goal, is to always, make our money when we buy and make the best decisions as far as which properties we're going to invest in with our passive investors. That's why they've invested with us for years. And you always want to educate yourself. So we offer free education. We do not sell books or CDs. We do webinars every single week. We have another webinar Saturday at noon that'll be somewhat similar to this one as well. And we also have the Passive Cash Flow podcast that I release every Friday. You can check that out on YouTube, the People's Capital Group YouTube, and the Passive Cash Flow podcast is on all major platforms. So I always want to educate our investors, always want to be educating from multiple sources, work with experienced professionals, which here at People's Capital Group, between our property management company and Seth and I, we bring 30 years of experience to the table, and also take into consider the degree of value play. That means how much value add is in the real estate. We'll talk about that tonight. Okay, we don't want to pay $20 for a $20 bill. Location, 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 and the history of the market. All right, so why do investors like New Jersey? Well, New Jersey is a very densely populated area. It's got strong rents. It allows you to commute into New York City in less than an hour in many of the cities. And we have a highly skilled workforce and a highly educated workforce, number 3 in median household income, number 1 in education. So we're the most educated state. All right, good work, Seth, congratulations. And the state is home to 20 Fortune 500 companies, number 1 in drugs and pharmaceuticals, number 2 and 4 in investments. So we see a lot of demand here in New York City. We buy in areas that allow you to commute into the city in less than an hour. And we find that people want legal tax shelters and predictable investment returns to confidently fund important occasions in life, okay? A lot of 401ks and IRAs are just riding the stock market, and that's really not a great place to be invested long-term. We've seen the stock market grow in volatility year over year. It's getting more volatile. The stock market is not getting less volatile. It's getting more volatile, and all the indicators of that indicate that really, if you want to put your money as a retirement account, it's something that should be growing at a consistent rate and not be up 30 and down 30% and left and right. You want a consistent growth over time. You want tax benefits. You want tangible assets that are going to hold their value when stocks are up, stocks are down, or jobs, unemployment's high or unemployment's low. So we buy in densely populated markets here in North Jersey. And we also buy, we make our money when we buy. So we buy in inner city areas that are middle of the road real estate, and we buy larger apartment buildings so the risk is spread out amongst the investors, okay? If you lose one tenant in a 25 unit building, you're still able to cover your costs and cash flow on the building. If you lose one tenant in a 2 or a 3 family building, well, you're gonna have trouble covering your costs. You're gonna have to put money into the property every month. That's why it's better to own larger properties. Even if you own a small share of a large property, it's better to own a larger property than a smaller property. So, we found people that want to invest in ideal New Jersey properties, the easy commutes to New York City. There's a consistent demand to commute into New York City, even with things going on right now. We still find consistent demand to lease our units, and our collections are strong in our markets, which is a testament to our management company in our markets. So we're doing quite well with collections during these times. So we have well-managed New Jersey apartment buildings that fare well in recessions. Our investors enjoy the predictable cash flow. They enjoy tax depreciation, okay? Real estate offers tax depreciation. So if you earn $10,000 in cash flow in a piece of real estate over a year, and you have $15,000 of tax depreciation, which is normally how a lot of our investments pan out, let's say, with more tax depreciation than cash flow, that allows you to actually write off that full $10,000 of cash flow, and it allows you to then have an additional $5,000 of tax depreciation, which you can go ahead and use to write off other forms of business income. All right, so tax depreciation is an amazing tool that is not offered by the stock market. It's not offered if you buy gold. It's not offered if you invest in a small business. It is offered when you invest in real estate, okay? So when I was saying the IRS favors real estate investors, we began this presentation, this is what I'm talking about. Tax depreciation allows you to write off your cash flow on your real estate, and if you get enough tax depreciation on the building, you will not have to pay any income tax on that cash flow, and that's how our investors tend to pan out for our investors. So that really just gives them more money in their pocket. The less you pay the IRS, the more you keep, the better your return on investment is, and that allows people to have these legal tax shelters where they can fund important occasions like college or weddings or travel with their family, and more importantly, not spend the time to analyze hundreds of properties, manage them, learn from many years of mistakes. And, real estate's a very management intensive business. There's a lot of risks to it. For example, when we buy a piece of real estate, we personally guarantee a mortgage. Now, Seth and I are willing to personally guarantee the mortgage, and we understand that that is a risk we're willing to take. Now, our investors do not have to personally guarantee the mortgage. All right, let's say you wanted to buy a property with your own or with a couple friends, you'd have to personally guarantee the mortgage. And that is a huge risk, meaning you owe that mortgage whether the building goes into foreclosure or whatnot, and that's a risky place to be. So we personally guarantee the mortgage so our investors don't have to. All right, that's a lot of risk we take off the investor's shoulders, and that's an important little detail. And including that, we buy bigger properties, so we spread out the risk so the vacancies don't hinder you as much. With that, combined with the great markets we invest in the North Jersey area, it allows us to keep high demand, high collections, and high cash flow, consistent cash flow to our investors year over year. And that's what they love about investing in this North Jersey market with People's Capital Group. So, as we were saying, we buy within an hour of Manhattan in cities that allow you to get into Manhattan in less than an hour. We do not buy in Manhattan. We do not buy in the boroughs. We're very active in Newark, Patterson, and Passaic, and Morris, and Essex, and Union County, and Hudson County. And we've been doing this for years. We've learned the rent controls. We've learned how to work with these areas, and we've learned how to source excellent investment opportunities that normal investors and would not find on the internet or things like that. A really great investment opportunity in North Jersey is generally not found on the internet or even through a broker. It's generally a pocket listing. A broker calls us up specifically before listing a property, and this allows us to buy these properties off market for discounted prices and then rent them out to good tenants for top dollar improve the building, make it a better place to live, allow people to move their IRA and their hard-earned capital into inner city areas where your capital can actually make a difference, right? One of the main differences our investors love about investing in the stock market over in real estate over the stock market is that real estate allows you to see a tangible difference in these inner city areas. And a lot of our investors enjoy investing in, Newark and Patterson and inner city areas, good parts of these cities and well-managed buildings that produce impressive cash flow, but it also allows them to improve these inner city markets. And there's, something really magical about that when your capital can go to improving local inner cities that we grew up around here that are struggling, and we're able to improve those areas and make those buildings better and make those tenants more comfortable, and therefore the cash flow of the building improves as well. So why do people prefer syndicated investing? Well, it's quite simple. People don't want to manage the property. Real estate's a very management intensive business. You cannot just go out and buy a property and think that managing it is going to be a passive job, right? Owning real estate is an active job. Investing in a syndication where a company like People's Capital Group uses their years of experience in their management company to manage everything from A to Z is a passive investment. So if you go to some guru course and they tell you for $20,000 you could buy their books and CDs and learn how to make passive income by buying income properties, I would hit the brakes for a second and recognize that if you're owning and managing the building, even if you're managing a management company, you're still on the hook for the calls. You're still going to be managing the management company. And let me tell you, we've dealt with management companies that were really not reliable. And because of that, we developed our own management company that does the right job and the right work. And that's allowed us to actually earn better returns for our investors and eliminate a lot of that risk by working with outside management companies, okay? Most syndicators hire outside management companies. We focus on working with our own management company, which allows us to keep tighter control of the building and produce better results. So by syndicating the building, by pooling capital together, you're shifting the investment risk amongst many investors. Therefore, the investors get to partake of all the benefits of a large building without taking on the risk of being the only investor in a large building. People like the idea of tapping into expert real estate knowledge, being lifted up above the pitfalls. And this has taken about 10 years of each of us to learn how to do this the right way, how to create a nice experience for our investors where they can break into this market, have the transparency of our management company and our financials, but also reap all the benefits of owning real estate in this high demand market. In addition to that, they value their free time, not having to secure complex financing. That's a huge benefit Seth and I bring to the table. It's very hard to get these loans. We have great relationships with banks that allow us to get these loans, and they're quite complex, but our investors don't have to be involved with anything on the banking side. We take care of all that from A to Z. So let's talk about once we buy the building, right? So we find a discounted building in a high demand North Jersey market. We pull together capital from a number of investors. We have a value add strategy. We're going to execute a number of things on the property. We're going to lower our expenses. We're going to increase our forms of income, and we're going to increase the rent roll. And that's going to allow us to force equity into the building. Okay, that's called forced appreciation. Because the more money a building makes, the more net cash flow a building produces, the more money that building is worth. So as Seth and I work with our company to turn the building over, improve the building, and make better cash flow from the building, not only does this make better cash flow for the building investors and also continue to allow them to take their tax depreciation, but then we go ahead and we do a refinance where we're actually going to exit the investment over a 3 to 5 year period, allow our investors to have the option to exit or the option to stay invested long term. So we make it very easy to do either one. But we exercise the buy, renovate, refinance strategy. That's the best strategy to pay less money to the tax man and make better returns. So we're going to talk about why we do the buy, renovate, refinance strategy in this presentation, and why that's one of the best strategies to make sure that you don't sell your buildings, you actually hold on to them, continue to cash flow, and that allows our investors to make better returns year over year over year. So we'll invest about $10,000 a month to find good deals here in North Jersey. We will look at sometimes up to 400 properties in a month to find one discounted apartment building for our investors that we try to bring them every quarter. We have 10,000 investors and buyers in our network and real estate professionals that we work with. We also sell fix and flips and have a residential division as well. So we have breadth of experience, Seth and I. We've fixed and flipped over 50 houses. We've wholesaled over 100 properties, and we own a nice $10 million portfolio right now. We've done over 250 transactions together, over $40 million. And we just sold a handful of properties over the last couple of years. We sold about 30 doors. So we have about 75 doors right now. And we're focusing on buying Class B and Class C apartment buildings in North Jersey. And of course, by taking on that mortgage, we're hyper motivated to make sure we hit the mark with our investors. And we've done that year over year here in North Jersey. So Seth, I'm going to let you talk here for a little bit. You can break into our aggressive calculating business model.
All right, great. Thank you, Aaron. Okay, so why do people value People's Capital Group's service? Well, as it says here on the screen, we're aggressive, we're calculating in our business model, and our mission and our vision is really to set a high bar for excellence in real estate investing for our investors, our partners, and everybody in between, the tenants, contractors, and we want to set a high bar for branding and good reputation. Okay, so let's get into the services that we provide. And the main thing our investors like is that we do, as Aaron was saying, we do all the work. We bring all the expertise. And here's some of it right here. So we spend about $10,000 a month looking for deals. We keep the best ones and share them with our investors. The not so good ones we sell off. The average ones or bad ones we let go. We look at a lot of properties while our investors are working in their field of choice or their field of expertise. A lot of our investors are, doctors, accountants, attorneys, or experts in their field, and they're working 40, 50, 60 hours a week. And they like the fact that we're doing all the nitty-gritty work here, looking at 400 properties a month, and all the rest here, creating passive income. So while they're working and focusing on their life and their career and making money, they like the fact that that money is being invested wisely and handled by a company like People's Capital Group that's doing all the nitty-gritty work here. Okay, some of that is here. If you could just go to the next slide real quick. Okay, so just a little more detail here. Our main goal is to create value, a value add for the properties, and basically that requires a lot of know-how, a lot of expertise. Our main goal is to increase the net cash flow, which ultimately increases the property value. Increase in property value increases the equity. Increase in equity goes to a higher cash distribution from the refinance. That's tax-free income. And tax-free income is a better ROI. So again, our investors like the fact that behind the scenes we're creating all these processes while they are not having to bring the expertise or the know-how to get this done. If you don't know what you're doing in real estate, it's very hard to add value, especially in a forced equity situation. So while they're relaxing or spending time with their family or taking the weekend off, and they're invested in real estate with People's Capital Group, their money's working for them. While they're sleeping, their money's working for them. And that's what we do. If you go to the next slide.
Yeah, I did. It's here.
Yes, okay. Okay, so a couple of the things that investors like about People's Capital Group is they don't have to have the experience. They don't have to spend years like we did learning how to deal with contractors, learning how to collect rents, learning how to manage properties, or learning just in general how to reposition a property. Okay, that takes years and years of work, and some people like to do that, some people don't, but we do find that with most of our investors, their focus is on their career and their family and their retirement, and they want an outlet where they can invest in real estate, but they don't have to put in the years of hard work to get the experience so that they can successfully invest in real estate. They want to be able to partner with somebody or a company that can bring that experience for them, and they can still take part in the benefits of real estate.
Thanks, Seth. I also want to just add one more thing to this slide here. It's so important for our investors and listeners here to understand that what sets us apart from a lot of other syndication companies out there, because this is a hot topic right now, real estate syndications, right? You could put your money here, you could put your money there, you can invest in Florida or Texas or, California, and there's lots of options out there. But many, many syndicators take other people's money and then put it into an investment many states away where statistics say it's a good long-term investment, and sure. But what happens is they hire an outside management company, and they hope that the management company works that asset as aggressively as they would like the asset to be worked. And what Seth and I found was that really was not the case with outside management companies. They really actually wanted to, collect a check when the rent was due and basically call a plumber when a pipe leaked. But we found that by owning our own management company, we were able to actually really take control of the asset, have a competitive edge over our competition, and therefore, just to really allow us to make better returns for our investors by owning the management company. It's a huge competitive edge that takes a lot of the risk out of investing in a syndication. Okay, so make sure when you're looking around for a good syndication to invest in, do they own and operate their own management company to keep tight control of their assets? That's a great question. And here at PCG, we do. All right, Seth, you want to wrap up here with the easy exit strategy?
Yeah, sure. So again, we want to be the company that people can rely on to extract benefits from real estate, to have their money work for them while they're not working. People who don't want to have a second job. And it ultimately is a 5-year investment on average. And they also like the fact that after 5 years, our investors can choose to get their principal back, of course, keep the profits. But after 5 years, they have the choice. They can keep their principal in the investment for another 5 years, or they can take the principal out and move on. Most of our investors, as we'll see a little later in the slides, decide to reinvest, but the choice is up to the investor. Aaron?
Thank you, Seth. Absolutely. So again, tonight, it's not so much about People's Capital Group. I know we've been talking a lot about People's Capital Group, but what I want to focus on is this is really about the investor. Seth and I have created a service where, it's really part of my job is to say, what's the investor's experience from the emails they get to the monthly updates, to the quarterly financials, to the cash flow checks they get in the mail. But overall, I want to make sure our investors are learning through the process and earning at the same time, but they feel safe and comfortable and confident in the people they're investing in, right? Because the truth is, you can make money in real estate in a lot of different markets, a lot of different ways, but we do feel like this is the best way to make money, and we're the most experienced in this asset class, and we found that the easiest way to make consistent cash flow is through apartment buildings in inner city areas. But I have a YouTube channel. A lot of my videos talk about how really the most important thing in real estate is the operators. And that's what Seth and I want to really impress upon our listeners and viewers tonight, is that when you're looking around for a company or a partnership or a group of people to invest your hard-earned capital into, the first thing is, do they have a good track record? Do they know what they're doing? But also, do you like them? Do you like what they stand for? Do you like working with them? Are they there to give you a service? Do they answer your questions in detail? Or do they try and just answer your questions to push you out of the way and move on to the next? So we really try to treat our investors the right way. And we're here as a resource to help them out with all types of investments in real estate. And, we work with about $5.5 million of investor capital right now. We kind of pride ourselves in working with a small investor who might start with a $30,000 investment. Some of our investors are contractors that we use to work on our buildings, and they've put together enough money to invest as a sophisticated investor at a $30,000 minimum investment, or maybe a realtor that had a big closing and could put $50,000 in to invest. We also have multimillionaires whose inventions you might drive by every day, who have over millions of dollars invested with us. So we really are a resource to the small investor, to the big investor. We can work with over $1 million each quarter. We can also work with as little as $30,000. So one thing I don't do, and one thing Seth and I, we do not do, is we will not take your entire investment capital. We do not feel you should have all your eggs in one basket. It's not something I would do with my capital. So it's not something I'm going to allow you to do with your capital here at People's Capital Group. So if you do want to invest with us and you do have the $30,000 to invest, you'd have to be able to show us that you also have probably another $30,000 in potential liquidity, maybe stocks or bonds or, you know, a easily cashable asset that would show more liquidity. So that way we're not working with more than 50% of your investment capital, because we want to make sure that you're not putting all your eggs in one basket. Even though People's Capital Group is a great long-term investment with a 15-year strategy, a 10-year track record, we're 100% confident in what we do. We want to make sure that we're giving you and we're exercising the right advice that we would use with our own money. And my own money, I wouldn't put 100% of it into one asset, right? I would diversify. That's the right thing to do. So even if you have the $30,000 available, we would still need to connect and interview you to make sure that you're right fit for People's Capital Group. And that is the first step to getting qualified, is the 15-minute initial interview. We could talk about that at the end here. So we evaluate potential investors to make sure they're a good fit for us with that interview. And we work with about 30 potential, we have worked with 30 investors right now. Most of them are repeat investors, and we have about 20 new investors lined up as well for our next acquisition. So we're very excited for that. The barrier to entry is low because Seth and I get the bank loan, so it allows our investors to own nice shares of the LLC created to own the property by investing a small amount of capital. They can get into those large buildings, and that's what our investors love. So we're going to do a couple case studies here. This is a small building that we bought in downtown Newark. It's just a great example of a 5-unit we bought here, where we bought around Rutgers University in the downtown Newark market. And we managed the building well. We bought, renovated, and refinanced out of the building twice and still make cash flow to today. So we bought the building for $130,000. I'm sorry, we paid it for $110,000. They were asking $130,000. We were able to capture $20,000 of equity off the bat. So that's our job. Make sure you make your money when you buy, get a discounted price for the property. And right here, we got about 15% off the market price. The renovation cost is about $30,000. So very small renovation cost here. Really less is more when it comes to renovating apartment buildings. We're not fixing flipping houses here. We're not putting in, you know, fancy kitchens, fancy baths, rental grade finishings. And that allows us to not only get the renovations completed faster and the units turned over faster, but of course, keep our renovation costs low. A penny saved is a penny earned. In 2014, we refinanced the property. 1 year later, it appraised for $310,000. We were able to pull out our entire initial investment, repay our investor back his entire initial investment, and we had a different split with him at the time. Then his split resorted to 20% to the investor, 80% to PCG. And that was allowed him to continue to maintain his ownership in the building. And then, of course, we refinanced again in 2017, split up another lump sum of cash, and the investor continues to get quarterly cash flow checks in the mail, monthly updates explaining what's going on with the property, and tax depreciation to write off that cash flow he's making on the building. Here's a 25-unit example of a property we bought in South Jersey and sold it in 2017. We bought it in 2014, sold it 2.5 years later for a nice profit. They were asking $1.2 million for the building, and we paid $1,075,000 for it. We captured $125,000 in equity off the bat. So again, our job is to get 10 to 20% off the list price. You never want to pay $20 for a $20 bill in real estate. Our job is to pay about $18 for that $20 bill. We secured the bank loan at 75% of the purchase price, 4.5% interest rate. Today, Seth and I are securing bank loans at under 4%. About 3.7 is the interest rate we're locking in now, because we personally guarantee that mortgage, and we have good relationships with our investors, with our banks, so that our investors can reap the benefits of these great bank terms, these great mortgage terms, right? The lower the interest rate, the more cash flow we all earn. So the private investors in this case, each invested $100,000 each. It's not always that clean. Sometimes we have a $30,000 investor and a $250,000 investor. And of course, you know, equity is all prorated to the amount you invest, the more equity you get. But in this case, we did a 60-40 split with our investors, with them owning 60, PCG owning 40. And we sold the building for $1.35 million for a 26% profit. And our investors earned a 26% actually over that 2.5 year period. So they got about 11% cash on cash return over about a 2.5-year period. The annualized cash on cash return was 11%. So we projected about 9.5% cash on cash return annualized for this project, and we hit 11. So we always try to underpromise and overdeliver. That is what we do here at People's Capital Group. We consistently project lower returns than we actually are able to achieve in real life. So we underpromise and overdeliver, so therefore our investors continue to come back, and we have over a 50% retention rate for our investors. So really strong model here for our investors at People's Capital Group to break into that North Jersey market. They really enjoy it. We work with IRA investors. About a third of our investors take their IRA out of the stock market and self-direct it into real estate. We can connect you with an IRA custodian that can help you diversify out of the stock market and get into real estate. You could self-direct your IRA into real estate. There's tons of benefits to it. I actually do a webinar on the 4th Tuesday of the month called How to Self-Direct Your IRA into Real Estate. So you can imagine that's about exactly what this topic here is. And if you want to learn more about how to self-direct your IRA into real estate and work with your IRA in the PCG investment in the North Jersey market, that's the 4th Tuesday of the month at 7 o'clock. You can jump on that webinar. And in that webinar, I'm going to really break down how to self-direct your IRA into real estate. For the most part, you work with a custodian, and that custodian allows you to move it into an asset with People's Capital Group. And in that, your IRA is going to start building more aggressively at a faster rate. And down the road, it can build more and more and more as we trade in the larger buildings. And you can get out of the volatility of the stock market that goes up and down and up and down, maybe help you sleep a little bit more, a little better at night, to getting out of the stock market there, just diversifying a little bit. A lot of our investors are just tired of the volatility of the stock market, so they break in real estate. Let's go over a couple of actual people that invest, those actual types of investors that we work with here at People's Capital Group. So a lot of our investors are accredited investors, meaning they have a net worth of $1 million, not including their primary residence, or they have a $250,000 income or $300,000 with their spouse, and that would mean they're accredited. If you don't make that cut, you're likely a sophisticated investor, meaning you have the minimum investment amount, you understand the investment, and you have some experience in that asset class. The first step is setting up an initial investor interview to determine if you're accredited or sophisticated. So we can break more to that in that interview. But the bottom line is we work with beginning investors and experienced investors, and a high income earner would be more of an experienced accredited investor. Okay. Generally, an accredited investor has small stock dividends coming in from a large stock portfolio. And we believe that with our cash flow, we can tend to beat those dividends and offer a strong cash flow and quarterly checks to our investors. Dividends are also taxed. Okay. So again, as I said before, real estate is unfairly treated by the tax code. Okay. If you went to the IRS and you knocked on the door and you said, "Hey, IRS, what's the most beneficial program you have for me to break into assets?" They'd probably say real estate. Real estate has tax depreciation. That allows you to write off that cash flow where you cannot write off dividends on taxes, on stocks. Okay, there's no tax depreciation from a stock. So you cannot write off the dividends. Again, the stock market is less predictable long-term. Real estate in well-managed and high-demand markets here at People's Capital Group, we've shown that they prove consistent returns month over month, quarter over quarter, year over year. And with the buy, renovate, refinance strategy, we really take a lot of the guesswork out of the business. We don't have to sell the real estate 4 or 5 years from now. We don't have to find a qualified buyer or pass a home inspection. We refinance the building every 4 to 5 years. That allows our investors not only the option to exit the investment and get back their entire initial investment and exit the investment, or stay in long term, but when you refinance a building, that money is tax-free cash. It's debt. It's good debt. Debt that will be paid down by the tenants for years to come on the well-managed real estate. But at the end of the day, that's debt. It's debt that Seth and I are going to personally guarantee to make sure we get a great term on it from the bank. And the debt is not taxable. So when we refinance out of a building and split up the lump sum with our investors, it's non-taxable income. And that's what our investors love, especially our high-earning investors that get nailed on taxes. Right? We work with doctors and lawyers and accountants and high earners, high executives, powerful executives, and these individuals are earning $300,000 or $400,000 or $500,000 a year, and they really are getting hit on taxes because the highest form of tax income is W-2, and unfortunately, that's where they get taxed very heavily. So our real estate investments allow them to write off that income and pay less taxes. Also, active real estate investors. So we sell properties as well, and we have active real estate investors that own real estate. Maybe they own a 2-family or 3-family. Maybe they own a bunch of real estate, and they manage the property day to day. They personally guarantee the mortgage. They're always on call for the real estate, and they're forced to buying smaller units, maybe 6 units or less, because they're not pooling capital together. They're using their own capital. And also come tax time, it's very frustrating because they have to file the taxes. So a lot of those active investors actually end up contacting People's Capital Group and saying, hey, I just came out of a flip. I have $50,000 to put to work. Let's invest in one of your properties. We move forward and move them into an investment with us. And they actually recognize that a passive investment with People's Capital Group earns them roughly the same, if not better returns than them owning 100% of a 2 or 3-family property. And what's incredible about that is they're not doing the management. They're not running around looking at hundreds of properties to find a great deal. They're not personally guaranteeing the mortgage or on call to manage the real estate day by day. And they're pooling their capital together in a syndicate with us so that they can safely invest in a large building. And even though they own a small share of that building, their return on investment is actually better than if they owned 100% of a small building. So a lot of active investors actually end up investing with People's Capital Group as a passive investor because we can beat some of the returns they're making as active investors. One more thing, come tax time, it's very frustrating. Real estate has a lot of tax details, and there's a lot of bookkeeping is a very important part of our business. We have a whole separate third-party accounting bookkeeping firm that does all of our CPA and accounting work, so our investors can easily get those tax documents at tax time. So come tax time, we make sure it's as painless as possible for investors, whether you're investing through your IRA, you're diversifying out the stock market, or you're just a cash investor. We make sure that tax time is super easy and super painless here at People's Capital Group. And our CPA can coordinate with your CPA if you have one. If not, a lot of our investors actually end up working with our CPA because he's so good for their own tax needs. The third investor we commonly work with is an IRA investor. All right, I'm going to explain this type of investor. We'll wrap up here for the night. So a third of our investors take their IRA that's going up and down the stock market. They move it into an IRA custodian, and they move it into an asset with People's Capital Group, an apartment building that sends them quarterly cash flow checks back to their IRA and a big lump sum upon the refinance so that they can build their IRA more aggressively than they were in the stock market. Plus, it's a little more predictable on where that IRA value is going than in the stock market. So a lot of times IRA managers have high fees. Here at People's Capital Group, we do not charge an asset management fee. All right, if you invest with us, we don't charge 1% off the top or anything like that. If I raise capital and you're investing in a building with us, I own equity in that building. So I have to perform to get paid. We have to create positive cash flow. We have to renovate the building and reposition it so it appraises a higher value when we go to refinance, 3 or 4 years down the road. So Seth and I, we work with performance pay. We have to hit our marks to get paid ourselves. And we find that a lot of IRA fund managers don't have that setup going. In fact, they just get fees off the top, whether they perform or not. And that's frustrating to us. And we do not set up our fund like that. We get paid based on performance, which is super important when looking for a syndicate to invest in. Also, IRA investors, they can avoid the volatility of the stock market, get more predictable investments. And we feel that middle of the road apartment buildings in high demand areas of North Jersey are more recession resilient. Okay, stock market is recession vulnerable. It's usually the first thing that goes down in a tough time. But we find that these apartment buildings are recession resilient. And to give you an example of why we think that, we have over 90% collections in many of our buildings right now. So just a huge testament to how good our management company is and how well we produce those results for our investors. So a third thing is, fourth thing here is that investors like to see the results in the community. So you can take your IRA, you can actually move it into the local community and see a difference. Take a mismanaged apartment building and improve the management of it, make it a better place to live, make it smell better, make it people more comfortable living there. And you could take these inner city markets and improve them one building at a time. And people love seeing the tangible effects of their IRA or their hard-earned capital going into real estate. So It's a huge plus. A lot of our investors give us feedback on. Here's a few of our investors, some client satisfaction. Of course, we've worked with dozens of investors through the years. Most of them are repeat investors because we say we're going to do, and we underpromise and overdeliver. So if you want to learn more about how you can get invested here at People's Capital Group, what I'm going to do is I'm actually going to take a link here, and I'm going to put this in the chat, okay? And if you'd like, you can click this link. And if you feel that you're qualified or you want to learn more about how to get qualified, again, our minimum investment is $30,000, and we work with accredited or sophisticated investors. If you feel like you meet that mark, what I'm going to do here is I'm going to put a link in the chat, okay? So go ahead and click this link, and you could schedule a 15-minute call with me next week or at a time that works for both of us. You can see a number of times on the link there. Once we set up that time to talk, we will determine if you're a good fit to invest with People's Capital Group. Now, listen, we do work on a first come, first serve basis. So the first step is getting qualified. There's no guarantee we'll have an investment opportunity for you right now, as it's a tough time in the market, but we are looking at buildings, and we are very closely negotiating on a number of buildings right now. However, we have a lot of investors in the queue, and we have to service our investors on a first come, first serve basis. So as you know, like standing in line for anything, right now, you do want to get in line to at least be somewhere in line so that when we do find that next opportunity, it will arrive in your inbox and you are a qualified investor with People's Capital Group. But the first step to get there is to click the link here in the chat, set up a 15-minute interview. If you think you're qualified, if you have the minimum investment amount of $30,000 plus some, you have some real estate investment experience, or you just want to learn more about how you can get qualified as a sophisticated or accredited investor, let's set up that call. Let's take 15 minutes of your time, 15 minutes of my time. Let's get to know each other a little better and see if this is a good fit for you as a long-term investment here at People's Capital Group. Okay, if you have any other questions, you can write them in the chat here. You can also email me at aaron@peoplescapitalgroup.com. I'm going to go back to our shared screen here, and I'm going to leave up the last part here so you can get our information. But I'm Aaron Fargnito. You also heard from Seth Martinez here. Seth, I'll unmute you. And hopefully you learned a lot about what we're doing here at People's Capital Group tonight. And hopefully we answered your questions and satisfied your curiosity. Again, to set up that appointment to learn more about the next steps and start the qualification process and get in line for our next building as a passive investor, go ahead and click that link in the chat. You can set up a call with us and we can get the process started. And if you have any other questions, you can email info@peoplescapitalgroup.com and our staff will get in touch with you. You can also call us at 908-464-0400 or visit our website, peoplescapitalgroup.com, where you can find my podcasts. You can find more videos. You can also ask us questions there, and you can apply to get contacted to set up that call as well on our website. But to fast track that, you can click the link to the right to set up that call. So that's it for tonight. I have a question here from Diane Lang. What is your average ROI? Our average ROI is around 10 to 11% cash on cash return annually, and around 13 to 16% internal rate of return annually. Okay, so cash on cash return is just simply the cash earned divided into the cash invested. That's around 10 to 11% cash on cash return annualized to our investors. So pretty aggressive return considering the average return of the Dow Jones over the 100-year average is about 7%. And then on top of that, real estate offers tax benefits. So if you take those into account, the internal rate of return, taking into account the tax benefits, are up to around 15 to 16%. So again, if you want to learn more about that, how you can, more details on those ROIs and how that works and what that means, you do want to set up the call to get qualified. The SEC kind of discourages me from talking a lot about returns and things like that on these open forums. So I'm not going to go too much more into that. what I can say is we have very aggressive returns that are very competitive with any other syndication out there. So that's it for tonight for everyone. It's about 8:10, so hope we're going to sign off here and relax here for the rest of the night. But hopefully you had a good time. I'm going to leave the screen up for a little bit more. I'm going to leave that link up for a little bit more. The next step is to set up that meeting with me, a 15-minute meeting, if you think you're qualified. If you're not qualified at this time, keep learning, keep saving, and we'll be in touch in the future. Enjoy your night. I'm Aaron Fargnito, People's Capital Group. Invest smart, invest safe, and let's flatten that curve.